In this final chapter, we're going to talk about fraud. Again, fraud is going to become a big deal in paper F8 and in paper P1 and in paper P7. So the idea in this paper, in this chapter rather, again as far as F1 is concerned, is we're just introducing the idea. It goes very nicely with what we've been looking at in chapter 17. Because fraud is basically doing something you're not supposed to. Internal controls about making sure that people can't carry out a fraud. So, first of all, what do we actually mean by a fraud? Well, a fraud, you can see, that is an intentional act to try and gain some kind of illegal or unjust advantage. It's things like removing property from a company so that I have the property without having to pay for it. It's things like taking money that a customer has paid to the company and taking it for myself. So fraud, in effect, is like stealing from the company. Now, fraud can basically occur in one of two categories. You can see there, removal of funds or assets. I take the inventory, I take a piece of fixed assets, I take a desk, I take a computer, I take some funds, or, that's the most likely one, or intentionally misrepresenting the financial position. I go to the bank and the bank says, how much money do you have? Let's have a look at your income and expenditure statement, and I've basically lied about the numbers. I'm making it look as though my company is making a lot more income than it actually is. Make it look like it's got a lot more profits. Or I apply for a loan for my company and the bank says, how many other loans do you have? And I don't mention all of them. So fraud is one of those two, physically taking something or not telling somebody everything. So you can see there, fraud can be perpetrated, fraud can be carried out by employees. That's one of the most common ones in the exam. Employees could take the inventory or could take the cash. But actually a more common, or not a more common one, but a more serious one is actually the management. The reason is the management are in a position to steal bigger amounts. Yeah, so if I can go down to the warehouse and I can steal something that's worth $10, that's not a big deal. A manager could be able to steal something worth $10,000. So managers are a potential sin of fraud. Third parties, we're talking about customers in particular. So customers could try and defraud a company, try and use a fake credit card so they get the goods without having to pay for them. So what we want to try and do is try and reduce the chance that there will be some kind of fraud. So, three different characteristics, it's called prerequisites, three things that we need to have for fraud to occur. Dishonesty. So, to reduce the chance of fraud, look at people's employment, particularly look at things like references. If you employ honest people, you are less likely to have fraud in the first place. Motive. If people don't have a motive to defraud you, it's less likely to occur. So keep the employees happy. Happy employees don't want to defraud the company. There's been some studies that have been done on this, and it turns out that most people who defraud a company don't do it because they need the money. They do it because they're unhappy with the company. So if you keep the employees happy, you're reducing the chance that fraud takes place. And finally, opportunity. Don't give them a chance. If they don't have a chance to defraud the company, then they won't be able to do it even if they want to. That's where your controls come in. I want to try and steal something from the warehouse, but we've got closed-circuit television cameras that are on all the time. There is a password to get in there, and it records who goes in and when. They do a check every day of how much inventory we've got. Even if I want to steal something, it's going to be very difficult for me. So, if we can make sure we employ honest people who have no motive and no opportunity, then fraud ought to be a fairly minor thing in an organisation. What is going to increase the risk? So we know what's going to be good from the point of view of making sure there'll be little fraud, but what increases the risk of it? Well, poor control systems. Again, not having any checks. The warehouse is unlocked. We check the stock once every 3 months. Anybody could walk in there. A poor control environment. Remember, the control environment is the attitude of the senior people. The attitude of the senior people is our staff are all honest. They're never going to try and steal anything from us. We trust them, so we're not going to do anything to try and prevent fraud. So they're not taking any action. Lack of supervision. So if I get to do an awful lot of my work with nobody checking it, then obviously there's an opportunity for fraud. Low morale, that's the motive bit coming in again. If people are unhappy, they will be more likely to defraud the company. And finally, unusual transactions. Now, what we're talking about there is anything that's not your normal run-of-the-mill, not your normal debits or credits. We've got some large individual transactions for things that we don't normally stock. Those might look unusual. So those might be a possibility of trying to defraud somebody. So, if we're going to prevent fraud, as we've already said, one way to prevent fraud is to have internal controls, to try and prevent people from defrauding the company even if they want to. The other thing, recruitment and selection. Make sure that we don't employ people in the first place who might defraud the company. Now, we've already said there are a number of different internal controls that you can have. We talked about this in the previous section. This is just a slightly more detailed list. Physical controls. If you're worried about people stealing the computers from a building, then lock them, chain them to a desk. Have something which is going to sound an alarm if people try and remove it. Segregation of duties. This is a very big one when you get to paper F8. It means that you don't let the same person have everything to do with the transaction. So, for example, the person who looks after the sales ledger in a small company, they receive the checks and they receive the cash. Now, it would be very easy for them to pocket some of that cash. So what we have is we have somebody else who records all the cash and all the checks. So somebody opens the post and they say, here is a list of all the checks and here's a list of all the cash that we've received today. So they then pass it to the sales ledger. The sales ledger person then actually posts all those checks. So they say that person, that debtor has paid off that amount. That debtor has paid off that amount. Now, we've got two people now being involved. If the person opening the post has said we received $300 of checks, then we would expect $300 to be posted into the sales ledger for people paying it off. We might then have somebody else who goes to the bank and takes $300 worth of checks to the bank. We've now got three people. And the thing is that if it was one person opening the post, doing the posting, and then going to the bank, it would be very easy for them to pocket some money and nobody would know. So if you get three people involved, it's reducing the chance of fraud. That's a very common one in organisations. Authorisation. Before you can buy something, you have to have it authorised by somebody who will want to know why you need to buy it. The idea behind that is to stop me buying something with the company and then I just take it because nobody in the company knows that we even bought it. Management. That's supervising people. Documentation, writing down what we've done. I wanted to buy some non-current assets for $30,000. So I have a record. I investigated why we needed it. I investigated why our current ones weren't good enough, why we needed a new one. I got a bit of paper signed by the boss. I investigated who we could purchase it from. I document everything I've done to try and make sure that you are happy that I haven't done anything wrong. Supervision. Again, supervising what people do, checking them regularly. Whistleblowing basically means that if there is a problem, we want somebody to report it. So whistleblowing means there is some kind of way within a company that I can go to somebody, probably not my boss, somebody independent, and I can say, something's going on in my department which is wrong. Now, the reason I don't go to my boss is the most likely person for me to find out about doing something wrong is actually my boss. I'm in the best position to find out if my boss is doing something wrong. So whistleblowing means that there is somebody that I know that I can go and talk to. Not my boss, but somebody else that I can go and talk to and say, I'm worried about this. Personnel, we've talked about that before. And investigation, making sure that we've got some way of investigating any potential fraud. So everybody in the company knows that if there is a fraud, even suspected, we are going to investigate it very thoroughly. That, again, is to try and prevent people from doing it in the first place. They'll be worried about what's going to happen. Personal policies we've already talked about: recruitment, appraisals, development, ethics. Get the right people, train them up with the right standards. That's the ethical bit in the staff training. Give them regular appraisals so we can encourage them so they feel happy, and again, they're not going to want to defraud the company. Implications: minor or major. A minor fraud is one that's not very serious. However, it might just mean it's not very serious yet. If the person is successful and gets away with this fraud, then they might try and do it again and again and again, and it becomes more and more and more serious. So a minor fraud is something which is fairly small once. It can turn into a major fraud in one of two ways. So a minor fraud is one which is not very serious once. It becomes a major fraud if it's not very serious, but you do it lots of times. Now it becomes a big deal. If I take $1 a day from one customer, that's not that bad. If I take $1 a day from every customer, that's now something big. Major fraud, small fraud, but now I do a big thing. Instead of taking $1, I take $1 million. So even though we've got a minor fraud, you might still want to investigate it and prevent it to stop it becoming a big deal. Major frauds, we will do things like reporting them to the police. We will do things like taking action, suing the person that's stolen the money to get it back from them. Make a big public fuss about fraud. Say to them, there are lots of companies that actually know about frauds and, in effect, cover them up. They are embarrassed that somebody's been able to steal money from them. A better way, in a lot of ways, is to be very public. This person stole $20,000 from us, so A, they're going to jail, and B, we're getting the $20,000 back. We are basically selling all of their assets to get the money back again. So you need to think about what your responses are going to be. So again, it's going to try and prevent people from wanting to defraud the company in the first place. Now, over the page, what is the role then of management? What are they supposed to do? Well, management, you've got the board of directors. It's their job to make sure that the internal controls are good enough to prevent there being fraud in the first place, and if not, to at least find out, to detect that it's happened. It's their job to do it. That's corporate governance. The audit committee, they are a bit more specialised, and again, it's their job to deal with the internal auditors, to perhaps look at, here is an area where there's a big risk of a fraud, so let's make sure that we perhaps have lots of internal controls there. We do lots of testing, preventing the fraud and checking that none has happened. Line management, that's my boss. My boss needs to make sure that I am unable to commit a fraud. So supervising me, checking me, whatever, to make sure I can't do anything wrong. And the final bit we've got here, internal audit. Again, their job is to set up the controls and then test that they are being followed. One of the biggest ways to get round internal controls is just not to do them. I am supposed to get this bit of paper signed by my boss. I will forge my boss's signature. I will pretend that my boss has signed it. And then I can buy something and I keep it for myself and nobody ever knows. So you need to check that the controls are being followed. Check that the right people are signing them. And finally, if there are any potential frauds, again, as we've said earlier, investigate them. Make sure that there is not a problem, or if there is, that you sort it out fairly quickly. Now you can see, having gone through the entire course, because we've now reached the end of F1, you can see going through the entire course, a lot of the early stuff, recruitment, training, etc., was very much about things that you and I can relate to. A lot of the later stuff, internal controls, fraud, it's really things that the ACCA are putting there so that when you come back and see them again in F8, P1, P7, you can say, I have seen them before somewhere. But the later stuff is all more technical. I think the early stuff, the motivation, the ways of managing people, I think a lot of that is just common sense. So in the exam, you will be given a mixture of questions. As I will say to you in the revision course, each exam is different. They're all done individually. But there will be a lot of questions from the early part of the course, which is about people and motivation and recruitment, which is just common sense. So try and make sure you do well on those. The technical bits, frauds, internal controls and such as well, just do your best at. You won't need to get everything right. You only need to get half of it right. If you are working, one of the best ways to prepare for this exam is to simply look and see what your organisation does. Particularly with these latter bits. What internal controls do they have? Why do you do your job in a particular way? What bits of paper do you sign? What bits of paper do people expect you to sign for them? How does your company prevent fraud? The more practical examples you can have, the better. It comes in very handy. So, hopefully, you will be doing the revision course, and in the revision course we will work through the pilot paper. If not, good luck for your exam.